Good morning, everybody, and a happy Saturday to every one of my viewers. This is Mohammad Ashik Khan, continuing my mock exam discussion. This mock paper 1 from ACCA BPP publishers. So today the continuation will be question number 26. Q's trial balance failed to agree and a suspense account was opened for the difference. I believe every one of you know in chapter errors and suspense account, when a trial balance will disagree and for the difference, it is a common practice that we open a suspense account, and then later we investigate for the reasons, and then we clear or clean or remove the suspense account and prepare an adjusted trial balance. The following errors were found in Q's accounting records. Before I read the errors, let me read the requirement. Which of the errors will require an entry to the suspense account to correct them? So we need to find out from the list of 4 items which are required to be included in a suspense account to correct them. Let's read the options or solutions now. Options. First one, in recording an issue of shares at par, cash received 333,000 was credited to the ordinary share capital account as 330,000. Since I have received 333,000, my double entry should be debit 333 and credit 333. I should be debiting cash 333,000 and crediting a portion of that amount as a par value. If I say 200,000 and the balance 133,000, I should credit as a share premium. Anyway, the total entry should be equal to both the side, debit side and the credit side, whereas 3,000 difference is coming. This effectively we need a suspense account to clear this. So number 1 is a compulsory option. So when number 1 is a compulsory option, if you read the answers, the 4th option, they don't include number 1. So 2 and 3 only, so that is not the correct option, so I am removing that. Second one, cash received, cash of 2,800 paid. When you make a payment, the double entry will be you credit the cash and then debit the respective expense or asset account. So here, cash of 2,800 paid for plant repairs was correctly accounted for in the cash book. That means you have credited in the cash book. But, so then the corresponding other entry must be debit. Whereas here what happened, but was credited to the plant asset account. So number 2, a compulsory answer. So option number 3 also out. Let's read the third one. The petty cash book balance of 500 had been omitted from the trial balance. If you omit any ledger balance in the trial balance, obviously trial balance will disagree. And for that also, we need to have a suspense account. Accordingly, number 3 also a compulsory answer. In that case, option number 1 cannot be the answer. So answer is second option. Let me move on to question number 27. Prior to the year end 31st July 2019, Canon Company has received a claim of 100,000 from a customer for providing poor quality goods which have damaged the customer's plant and equipment. Canon Company's lawyers have stated that there is a 20% chance that Canon Company will successfully defend the claim. This question relates to provisions and contingencies, which includes contingent liabilities and contingent assets, IAS 37. Accordingly, when you talk about the provision, there are 3 conditions they are looking at. One is probable outflow. When you say probable outflow, it must be more than 50% chance. Number 2, obligation should be legal or constructive. Third one, reliable estimate. If you can make all these 3, then effectively this will fall into provision, and then you need to pass a double entry. So here what they say, that a customer has got the order and 100,000 was the amount. He made the claim because a customer has done some purchases. Damaged the customer's plant. The customer purchased some goods from you which damaged the customer's plant, and the customer went into courts, and the company's lawyer saying that there's only 20% chance that you will successful, meaning 80% you will definitely lose, meaning it is more than 50%. So when more than 50%, that is probable. And it's very clearly we know that there is a legal obligation that you have given an invoice and you have supplied goods, and then there is an undertaking with both parties, so it's a legal obligation. Thirdly, there's a reliable estimate. You exactly know how much is the estimate of the provision, which is 100,000. So answer should be Canon should provide for expected cost of the claim 100,000. Option number 3. Now this 28. G company, a sales tax registered trader. When a company is a sales tax registered trader, any of the sales tax cannot be considered part of an asset or expense or an income. This should be, it is like a bypass. You receive it and you pay to the department. So all of those sales tax should be removed, ignored. Now what's the question? How much should G company capitalize as non-current asset in relation to the purchase? So you have computer, the cost of that you should be capitalized, additional memory you should capitalize, delivery cost obviously yes, installation yes, but maintenance for 1 year, that's a subsequent expense which you will not capitalize along with the what you call the cost of the computer. So the correct answer will be 1040 minus 25, so it is 1015. The answer is 1015. What you really do, so 1040 the total minus 25, so answer is 1015. Yeah, and remember, sales tax not included. Suppose if the business has not registered for sales tax, then this 182 also should be considered. Accordingly, answer is 1015. With this, thank you so much. Enjoy your weekend and await for my next video. And as usual, I always request you to subscribe my YouTube channel, and share it with your beloved ones, and also don't forget to press the bell button. Thank you so much.